Welcome to another episode of Real Estate Chat with Robert Ede and John Der Perez. Today we're going to be talking about, oops, I bought at the peak, or I bought, 1 month, 2 months later, 3 months. I bought today. Prices are going down. What happens next? And so Robert has shared some fantastic and very analytical charts with me in terms of price movements. We're going to look at the 1990s. If you had bought at the then peak, what would have happened to you if you had sold? And do you sit and wait for things to get better? Are things getting better? Or do you jump in now? Or as some agents would say, anytime is a good time to buy. Is that true? Or is that just salesy talk? So Robert, I'm going to load up the first chart here so that you can go through this explanation. And we're going
Okay.
to answer this question in using facts and figures.
Okay, so we start out answering the question by analyzing where we are now. Next week, the Toronto Real Estate Board is going to put out its numbers for the month of November, and I predict it's going to tell us that we have somewhere around 4,500, maybe 4,700, because it's getting better in the last half of the month. Sales for the month of November, which is about 40% less than the 5 and 10 year average. And about 50% of it was last year, but last year was a record. So it's a lousy November, and it's the same lousy that we've seen for 1, 2, 3, 4, 5 months in a row. So it's telling us about now. We're going to talk about the future in a second. Might as well, yeah, okay. So we have to also guess about prices. Now, this is a very small chart, but it's only because I use going way back years and years and years to come up with the reasons for my projection into the future. So I predict that the price change for November from October will vary by minus 0.28. That's the average of what is done for the last 21 years. And so I see no reason why the market should dictate or should vary from what it's done in the past. So I call that flat. Not up, it's not down, it's flat. So prices are what they are. And the only other factor is interest rates, because interest rates determine what monthly payments are, and monthly payments are what makes the world go round in the real estate business. So here we look at the pattern. The pattern has been, we got a blue line along the bottom, which shows the nominal rates, meaning what was reported by the board every month as we went along, and that's actually annual prices. And then if we take today's number and backdate it from the CPI, what's the adjusted for inflation number? So we see that peak going back to 1989 was somewhere actually over 550,000, even though the real number was 280 or something rather. And that was the time when they decided they're going to raise interest rates to kill inflation. And guess what? They sort of did for a little while. But then it got right back, and here we are again doing it again because of all the other things that happened. So will it be the same or will it be different? And like the same can mean, will the prices go down? But also the same can mean, will they fail to curb inflation? Will they fail to achieve their objective? Will they chicken out and not raise interest rates and hold them as long as they should have because they held them too long, too low? Because that's very, everybody likes that. What will they do? And that's a great unknown based on what you think the backbone of the Bank of Canada and also the Federal Reserve will do with interest rates. So the past is the same, there's a pattern, but the future is different because of the things that are happening right now. So here's again the past, and this is the famous adaptation of Mr. Hoag's chart of all the recent peaks. We put them at 100, and then we see what happens out in the future. And this one went down in a hurry, and then is putzing along, sort of going up, not going down, and like we haven't got the most recent one, which goes down a little bit. And the year that I have highlighted in whatever color is that greeny blue, if 89.90 is our best market comparison, we should look at a little bit longer. After 2 years and after 7 years, it faded 70%. Will that be the same? Well, this is not then, and then is not now, but if we look at something that it was created in similar circumstances, it might give us a guide. We're already at 20, could go to 30. What's the worst thing that could happen? It could go to 30. Okay. All right. So I tried and play around with all these things and say, okay, most people are concerned with interest rates. Most people are concerned with monthly payments. And that's really the whole cruncherino that I took a mortgage and the average price, a mortgage of 75% mortgage on the average price in every one of these years and tried to make a comparison and came up with a magic number of $4,174.40 is the equivalent to what people were paying at the very peak of the market back in 1990 when interest rates were at 13.25% and prices were, as we say, much lower. So the monthly payment then in real time was $21.40, adjusted for inflation is $21.47, and move that up into today's numbers. Today's numbers, we have to come down about 27 or 30% from where we were at the very peak. We're at the peak, it was $5,394 per month to bring the affordability back into line. People react to the monthly payment. They don't care what the interest rate, they don't care what the price is, they care what the monthly payment is. You can make some magic to change the monthly payment, they're okay with it. So that whole chart there says, okay, well, what is that monthly payment at 7%, at 6%, at 5%, at 4%, at 3%, at 2%? So I encourage you to look in the down below and get my blog. You can see this chart, you can blow it up and you can examine it. There's so much jam-packed into every one of these charts. We're going real fast through them. But if you like to see how people think, you can see how I think, and you can see how the market thinks by looking up these charts from the blog where they are contained.
Which is www.unclebobexplains.com. There was one more. Hold on, sorry. There was one
Sure.
more that I closed my window here, but while I'm loading that back up again. So to answer the question, should you wait?
Yes.
Should you buy now? From
Yeah.
the most recent chart that Robert you've shown, basically you're saying that at our current drop from the peak, we're paying pretty much the same, like adjusted for inflation and all that sort of stuff. We're paying the same monthly as somebody who had bought in the 90s was paying at the then adjusted time, like in terms of it's the same time period where you saw that the prices were going down and your interest rates were going up. Did I understand that correctly?
Yes. At that time, prices were lower, incomes were lower, and interest rates were higher. And so then we adjust for the difference in the time. And we see where incomes are now, we see where prices are now, and then we try and find the common ground with the same monthly payment. And so that was what that exercise was all about. Again, trying to figure out where's the bottom. Where's the bottom? Where's the bottom? The bottom depends on interest rates. And so
And if
that's really,
somebody could wait for that bottom, and really the question then becomes a matter of what is your lifestyle choice or what's your lifestyle decision until then? Do you keep renting? If you're a renter, so you didn't buy, you're worried that prices will continue to go down. Do you just keep renting and see at what point it comes to the bottom? And there's pros and cons to everything, and there's nothing wrong with renting if that's what you want to do. You just have to accept the fact that you are foregoing making obviously principal payments, but then somebody could counter argue that, yeah, principal payments on what? The equity is gone anyway because property prices are going down. So I'm still going to end up being underwater. So let's look at this case by case, Robert. And then we'll show the last chart actually is pretty neat because it's going to predict or show how much more prices could go down. But let's look at a renter, for example, somebody renting today. What's their advantage if they don't buy? What's a disadvantage if they don't buy?
okay. Whether it's the most beautiful, fantastic, wonderful time in the market 2 years ago or 5 years ago to buy or not buy, if someone is ready to buy, they have a natural tendency called risk aversion. And then the minute after they've made a decision, they get buyer's remorse. These are very human things, which are based on what if I'm doing the wrong thing? So what we're talking about today is, what if I miss the bottom? What if I don't get the perfect thing that's going to show up tomorrow? And the analogy that I draw to someone who's, they got this pool of money that they don't want to lose, but they want to invest it in something. They've decided they want to buy a house because they don't like the neighbor they have in this rental complex. They don't like the landlord that keeps on changing the rules on them. They don't like the fact that they're not living where they want to live. They don't like the backyard that they don't have. They don't like the parking that they don't have. All those things that they don't like, to say, oh no, I'd rather keep all those things rather than lose money. Now, great. Why do you want to buy? You want to buy to solve a bundle of problems. You've got the money. You're making a payment on something. You're either going to rent the money from a mortgage or you're going to rent the space from a landlord. Only one of those gives you appreciation. Then you look at yourself and say, okay, how will I know when I've got the right one to buy? You find the right one to buy by looking. So you go and look. And just like if you're dealing with a girlfriend that you want to marry, when you marry one, you don't keep on looking. When you marry one, all those doubts go away. You say, now I am satisfied, because something happens to you when those needs are satisfied. And you say, oh, I don't need to look around. Of course, the grass is always green on the other side, but she's probably got smelly feet. You know, whatever the thing is that you know that you're giving up in order to get what you made a rational decision, or perhaps an emotionally charged decision, to satisfy all of your needs. So we're not talking about a stock. We're not talking about an ETF, because those things can both disappear. The value of those can disappear. Look at the stock market goes down, ETF. Look at this thing that happened with the crypto schmipto, whatever the guy was doing. Just all disappears. The money's gone. Mini made up. So real estate is not the only thing that can go away. What it is, because they're not making any more of it, is a tangible asset. That if you decided to buy a house, you decided to buy a place to live where you control what happens. You've decided to look around and put together all the things that you want in a backyard, and a front yard, and a parking, and a basement, and where your kids are going to be, and how far it is to work, and how far it is to walk, and how park, and all these things, the school. And you get a package together where 80% of the things that you really, 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 really want, you got in one package, and you figure it out and you can afford it, you buy that, because that's as good as it gets. You don't get everything. So right now, there's somebody who's absolutely serious about selling. Is on the opposite side of where you're absolutely serious, but you want to make sure you're doing the right thing. So the person who absolutely is serious about selling is who you're looking for. You're not looking for 15 properties to build a portfolio. You're looking for one that has a school, that suits the kids, that suits the backyard, all these things that go into the package. So you don't care. How long are you going to live there? 5 minutes? The real estate market is going to go in a cycle of 12 or 15 years. Who knows? Maybe it's going to be only 3 years. Maybe they're not going to be able to cause inflation, and people will be buying tangible assets like crazy, like gold and like silver and like real estate, because it actually has some value no matter what happens to the currency. So don't be an idiot. You will never be able to find the bottom. All you can do is find something that satisfies 80% of everything that you want to find in a package that you can afford. Now, in this kind of a market, you've got sellers who are willing to talk turkey. A year ago, every seller said, look, I'm looking for 125 to 145% more than I'm asking. And I want it all cash, and I want it on this date. And if you don't like it, take a hike, because there's 4 more guys behind you. What can you do? You give it to them, or you go away. For that person that's bought at the peak, sorry, if you sold something, you sold something too much, and now I paid too much. Well, not too bad. If somebody has paid too much and it was their first time, they're maybe going to be underwater for a while, but they get an interest rate. Hopefully they didn't go variable. Hopefully they went long-term, because they're, risk-averse person. And so they don't have to think about it again until that mortgage comes up for renewal. A lot of things can happen between now and 3 years from now and 5 years from now. Most of these, expert economists talking about interest rates are saying it's going to be a 1 year cycle from now, it's going to be 2 years at the most, so they don't know. So if it's 3 years, you can make a plan. But if you don't buy, then you'll never know what you missed. And the only way you can figure out whether you're missing something or not is to go out and look. So right now, anybody who's got the property for sale between now and December 25th is absolutely serious about selling. Either that, or it's vacant and they don't care. But you want to find someone who's absolutely serious about selling, so that you can make a buyer's bargain with them. You can say, I would like this, I would like this, I would like this, I would like this.
So
And
really the way we've got to look at it is, where does the opportunity lie? So the question really should change from, is now a good time to buy, to, what is the opportunity that I get if I buy today versus if I wait, right? My parents were renting, and
right,
this was in the 90s, right? And
Yeah.
this resonates with what's happening right now because my parents lived through it. I was too young to understand what was going on, but they were renting. And the place that they ended up getting, the place that they ended up renting, the reason why they had to move out was because the owner had to sell it. Why did the owner have to sell it? The owner was over leveraged, owned
Mm,
multiple investment properties, and couldn't keep it.
yeah.
Now, obviously, in hindsight, if that owner kept that property, they'd be totally rich beyond imagination if anybody had kept their properties back then. But guess what? Reality happens. Interest rates went up. Uh, all of a sudden, they were stuck with multiple properties over leverage, couldn't keep it afloat. My parents bought in the 90s. I believe they bought after prices at peak. So prices were on the way down. Interest rates were up. And for a good, when you look at Robert's chart, when it comes to whether you look at the nominal or the inflation adjusted figures, it's a scary period of time where if you had sold the property you bought, you wouldn't have made any money on it anyway. You would have been at a loss. But obviously, that would have been a lifestyle choice if you were to go to a bigger house or whatever. But my parents kept. Only recently, a few years ago, did my parents ended up selling and then downsizing to a home in Niagara before prices shot up like crazy. But they ended up selling it for about three times or more, maybe even four times what they had bought property for. But why? They weren't looking at flipping the real estate. We had, back then, my aunts, my uncles, my grandparents had moved into the house. There was like 11 or more of us living in this one house, 3 bedrooms, finished basement with 2 additional bedrooms. We were all living in this house
Family home.
through the 90s, a family home. And so for you, somebody who's renting today, and you're skeptical, and we're not trying to sell you anything. This show is purely facts. You decide what you want to do with this evidence. But you're renting today, and as Robert said, you don't like your neighbor, you don't like the apartment building, you don't like the school that your kids are about to go into. Is the house that you're buying a 1 year move, 2 year move, 3 year move? If you had bought at peak February, are you selling it 3 months later when prices went down 15, 20%? Or is this your family home that you're going to be in for 10 years, 5 years, 10 years, 15, 20 years, right? And so you're going to see a lot of marketing. It's always the right time to buy. Ask why that is, right? Because the one thing is for sure, and regardless of how long this takes, Robert doesn't know, I don't know how long this will take. I mean, the quick answer is what Robert said. When interest rates start to go the other way, then sure, that's the bottom. Are you going to wait until then to put your kids into a better neighborhood? To have a bigger sized home that you need space for. If you don't need it, you don't need it. Stay renting. But if you need these things and you need a lifestyle change, the fact that time is on your side when it comes to a tangible real estate product, that alone is going to save you regardless of when you buy. But of course, you've also got to look at the proper buying conditions. Robert.
There's always plenty of time to do nothing. And sometimes it's wise and sometimes it's not. The other question that goes hand in hand with that is the value of money. That, I said it before, you can have $150,000 and you got it in the stock market. Stock market goes in the pooper. Now you have $62,000. You didn't buy a house still to live in with that money. And with real estate, you can leverage it like 4-to-1. You put down 20%, you get a mortgage for 80%, and you buy the whole thing. You're gonna have a monthly payment somewhere. Anyway, we won't talk about that too much. We'll talk about do what's best for you, but don't fall for your fears, fall for your faith that what everybody has done for the last 50 years, for the last 100 years, for the last 20 years is the right thing to do. The city expands, more people come. You buy the very best thing that you can find, and you cut the hardest deal and the person won't deal with you. Just walk, because there's a selection for you to buy.
And that's the important thing. Do the right thing. Use the knowledge and evidence of somebody who knows what they're talking about. And I don't want to end on a down note, but I'm going to share Robert's last chart here, which is how much further prices could possibly decline. And you can look at this as a negative. You can look at this as an opportunity. Negative meaning if you bought, of course, and then you bought at peak, that's an even more profound situation to be in, then you are in negative territory. And if you didn't put a 20% down payment, I mean, if you put a 20% down payment and we're down 20%, I mean, obviously you got to crunch the numbers, because it doesn't always work out exactly, but then you're pretty much floating at minimal or no equity. But if you have bought now and we're anticipating an even further price drop, Robert, I guess we can finish off this episode with how do what's the advice to buyers to hang in there and to reassure them that, what, as long as you're looking at this long term and as long as you can afford it, first of all, and it's the correct financial decision, how do you justify buying November, December, where there may be a lot of great opportunities from motivated sellers looking to make that move and needing to sell? What is that? What is that advice you would give, Robert?
Okay, we'll look at this chart just for 1 second. And if you go to the second line, which is 946,000, which means if properties continue to go up 1% down a month, which they are sort of averaging a little bit more than that, then you're going to be buying at the same price as people who bought in July 20 paid, November 20 paid. So right now, a lot of people would like to go back to then and buy at those prices. So you can by watching for, again, these are averages, watching for the right one. It could be that this is going to turn around. It's not going to go down 1% a month. It's going to stay flat. It's going to keep on going at just around $1.1 million as an average. Again, you can buy something for 650, you can buy something for 850 and something for 1.5, just depending on how close to the CN Tower you want to be. So this is a what if things go terrible, what if things go sideways, what if things continue on the way they probably are, which is sort of fooling around because they don't want prices to go up. They want things to come down, affordable, attainable. But so to answer the question, do what you want to do in your hearts, minds, in your being.
Do what's right for you. Do what you feel is right. It's a lifestyle choice. You're going to get pulled in many different directions from the media, from economists, from other real estate agents, from real estate haters, from all sorts of people. There's a critic, everybody's going to be saying all sorts of different things. You've got to look at evidence and see what makes sense. And the most important thing is, of course, a real estate being a lifestyle, huge lifestyle decision, is you make that right decision based on things that you know and understand and have expectations of what the market can do and what the market won't do, right?
And nothing else. No other investment provides you with a place to live in the place where you've decided to be at the price you've decided to pay. You do all the picking when it comes to buying a home.
Absolutely. Thank you for joining us on this episode of Real Estate Chat. If you have any questions, type it into the comments below or reach out to Robert or myself. Our blogs are linked on the description for this.
And also remember to click the likes. Everybody's viewing it, but no one's clicking the likes. Everybody else is clicking the likes. So click the like.
That's what we better. That's our call to action. So we got to learn that. Click like, subscribe, click the bell if there's a bell that shows up here. And enjoy. Hope you enjoyed the real estate chat we had today. See you next time.
Right on.